See, what is the global setup? And global setup, if you look at the list of assets which are in all-time high, equities, Bitcoin, they both indicate two simple aspects, which is equity is about risk, Bitcoin is also about leverage. So the appetite to buy risk in the system, I think, is getting more and more pronounced. For me, that is the first trend. Second is connect the trend with news. If you connect the trend with news, the markets by and large, I'm talking about global market, by and large are of the view that the tariff interplay would be constructive. Second, global equity markets or US markets which went through this mid-air turbulence, a shakeout in the month of April, they also have managed to stabilize despite concerns which are centered around inflation or concerns which are centered really around as to what will happen to the second half of this year in terms of economic growth. So the setting on the table, I think, is more centered around sentiment levels and technicals rather than absolute news flow. There is nothing new from Fed. There is nothing new which has come in terms of a trigger. There is nothing new on the tariff front. Then why are markets making an all-time high? That's largely because money is moving out of dollar. And if money is moving out of dollar, it is moving back into equities. So that currency versus dollar interplay, I think, is getting more and more pronounced. The most crowded trade in the world in the month of Jan was long dollar. That was the most crowded trade. When the most crowded trade in the world reverses, it will see flow of money moving back into other assets. Now, the purists would say this is money, this is the beginning of the decline of the dollar. The technical guy would say this is sectoral rotation. Macroeconomist would say that this is repositioning of dollar as a reserve currency. Bottom line here is the most crowded trade in the world, which is long-lived dollar. I'm not saying it's not going to live, but I'll stop long-lived dollar. So it's changing.
It is changing.
It will take 10 years. It's not going to change. See, one thing, mark my words, why am I spending so much of time on the currency? We'll talk about levels and everything else, is because next 2 or 3 years, you will see more and more pronounced volatility in dollar.
Okay.
So it used to be the safe haven because it used to hardly move. Now you will see more volatility. So the dollar index VIX and the dollar VIX will go higher, and that will lead to this adjustment. And that is why, money is moving out. So when dollar money moves out, it's a large leverage trade which is unwinding. Now in the short term, I think हो गया अभी तो लगता है बात करेंगे, but it is a multi-year trend now. Like green and red, it's only red for dollar now. Trust me.
Yeah. Well, so that's Nikunj's take on where the dollar index is heading right now. And remember, the dollar is at levels that we've not seen since 1973. Is what we stand to understand. So moves coming in on dollar index, they are going to be crucial to watch. But let's just focus back home and talk about the kind of trading session we had yesterday. We were range bound at best. That's what the Nifty has shown, 0.5% cut coming in across the board, although banks did slightly better, with PSU banks being the top sectoral gainer. But that negativity that we've seen in realty continued in yesterday's trade as well. But if you wrap up the month of June that we've seen, we've hit multi-month highs when it comes across sectors, across indices. You have Nifty that hit a 9-month intraday high in the month of June. It also advanced for the 4th consecutive month, and names like Geo Financial, Grasim, all of them have done well. Overall, the dominance of the broader market continued, because if you take a look at what these returns have been over the month of June, you had Nifty that was up 3.1%, but mid-cap was up 4.1%, and Nifty small-cap was up more than 6.5%. So that trend that we have seen of the broader market once again taking the lead and taking the entire market setup up with it on a monthly basis has continued. Nikunj, what do you make of the trading session that we saw yesterday? We were range-bound, but the month of June overall doesn't seem all that bad.
No, May and June have been far more satisfactory than what anybody anticipated. What did we get? We get a little bit of support from... We had war, we had flare-up in crude. Nothing incrementally really went right, at least at a global level. But yet, Indian markets and global markets have managed to really eke out very strong gains. The question you got to ask yourself as you approach the trade this morning is that, first, why is that there is no thunder even though we've seen a breakout on the Nifty? First. Second, how will July be different from June? Third, when will this entire impact of low inflation and early monsoon start kicking in. And fourth, if the sectoral rotation is genuinely on, where the puck is going to settle now. That's the 4 point. Now let's look at Nifty. Somewhere I'm disappointed, and I'll tell you why, because this entire hullabaloo which happened around 25,200, 25,200, 25,200, 25,200, we've been parroting this level for 30-40 days now. Almost 31 last week, add another 36, 37 days. There was supposed to be a breakout, and markets were supposed to go higher after this breakout. The breakout has happened, follow buying is not there. Disappointing. Second, the market now will move into what could be called as the result season, where expectations this time are high. Monsoon impact, low inflation, margin expansion, low commodity prices, tax cut, all those things are at play. I don't think earnings season is going to be that great, considering what kind of commentary, what we've got in Q4, and we've had some numbers which have come in the last 8-10 days. So that is the second test now. Third is, if you frankly ask me, is that I don't know which way tariff is moving. It appeared, there's a news flash which said that 8th tariff with India and US will announce tariff. I was reading something last night which says that, okay, it's, there's a difference between sip and a lip, which is that you don't call it done till the time it's done. So the tariff volatility is something which I don't think markets are prepared for, because market think it's a done deal. But the most important part here is that we must recognize that a lot of sectoral rotation has started. So if you, let's say, bought HDFC Bank in the month of June, it was great. If you bought SBI in the month of June, it was bad. If you bought mid-tech tech in the month of June, it was great. But if you bought large cap tech in the month of June, that was bad. If you bought steel, it did well for you. If you bought copper, it did not do well for you. They both are metals. They both are banks, and they both are IT. I think we are headed there in terms of the surprise. So I think sliver of the market in the month of July will give you outperformance. Large part of the market should have a downward bias, and some part of the market should go down. Because these factors which I've just outlined, which is in terms of earnings, flows, if you match everything together, the inertia in the market cannot be generated with same set of cues. The inertia in the market has to come from something else. Like the inertia in the market came because of the 90-day window. The inertia in the market came because crude fell. The inertia in the market came because of the dollar index. So my whole thing is, ab kya hoga? I mean, so far it's been a great Hindi movie. Started with a promise, the year. Then came the problem in April and June, and now towards the June, it was a great close for the first half of this year. Second half of the year, will it be a Hollywood or a Bollywood movie? I don't know. But I don't think we are in for a very, very predictable July. I could be completely wrong, ladies, but that's my sense also. So don't blame me afterwards.
There's a saying in the market that history repeats itself. But when we see the history, or rather the data points for the past 3 July months that we have seen in 2022, 23 as well as 24, Nifty, mid cap and small cap, they all have actually given positive returns. So can this time be a little different, or this time it's maybe one should adopt a different strategy like you were just highlighting?
See, there's also a saying which says sell in the month of May and go away.
Yeah, that did not
It did not happen this time, right?
Absolutely.
So, and with all due respect, history may not repeat itself, but certainly rhymes. But I'm not a big fan of looking at a month and then looking at the past track records and coming with an opinion. I'll tell you why. Imagine in 2024, you were coming from an election cycle, right? So the market reaction was very different in the month of July 2024. Similarly, in 2023, there were a lot of other external factors which were at play. In 2020, there was COVID which was at play. In 2021, there was this comeback revenge shopping which was at play. In 2022, July, August, September, it was the government spending which was at play. If the factors are every time different in the month of July, right now dollar index is at play. So looking at one single data and assume that we will have a winner, we'll have a verdict on a hand, maybe very different, because market is a moving part. And I'll just, before I get philosophical, I'll just quote something which I've read over the years. It's a quote from Barton Bix. Barton Bix is ex-Morgan Stanley, one of the finest strategists I've read through it. He says that we look at past and then try and predict future. What we don't realize is that past is actually enigma, and it is something which is unpredictable. That's my personal view. That's Barton Bix's view, not my view, but that's the way I look at things. Because the circumstances are different. See, same time last year's history, it was elections. So market reacted differently.
Correct.
Uske pehle, there was government spending in PSUs. Before that, it was opening up in the economy. And in 2020 it was COVID.
COVID, exactly.
So last 4 July, every factor is different.
Right.
So the factor in 2025 would be dollar, earnings, dollar,
Maybe
earnings,
tariff deadline.
tariff deadline. Crude is history now.
Okay.
See, world has reconciled to the fact that the dependence on crude is getting reduced.
Lesser.
OPEC and non-OPEC now are competing for market share. There is abundant crude in the world. And one thing which we must realize, which nobody is talking about surprisingly, is that you got technology which takes you much more deeper now. So if you, let's say, drilling at 10,000 feet, you can go to 12,000 feet now. So that is something which is ensuring that crude is abundant. I mean, that explains why America has become suddenly a surplus in crude. So I think crude from until unless it goes to $100, I think crude is something which is manageable. Let's see.
Right.
And